What's up, guys? My name's Nick Hearn here. I'm going to be going over some option stuff that I'm kind of looking at for this weekend. Current date is February 9th, 2018. It's about 1 o'clock Central at 12:40, and as you can see, and we've pretty much had a market pullback. Everyone said it was going to be happening, and here it kind of has. Look at like SPY. In the last year to date, it was all going up, and now it's coming down. Caught, a lot of us traders not really by surprise, because everyone said it's gonna happen, it's gonna happen, it's gonna happen, and now it's happening. So I'm kind of gonna go over what I'm gonna look at this weekend for trades for upcoming Monday, next week. Put them in Monday, Tuesday, see what we're looking at. So what I'm going to be looking at are stuff like Bank of America. So what I'm going to be doing is I'm going to try to get in either calls or puts. The great thing about options is you make money when the market's going up, or if it's going down, you just bet with it or against it. And so I'm looking at stocks kind of like Bank of America, where the options they're not super expensive. I usually don't like spending any more than $300-400 a trade. I go for just kind of small wins. I'm not going for like huge, blow up my account type of trades. I usually have a lot of positions open. So for next week, I'll be looking at probably the February 23rd expirations on most all stuff. And yeah, that's what I'll be looking at. Stocks like Bank of America, like I said, they're lower priced options, so you can get 2 or 3 contracts in. I'm not looking at stuff like Tesla, where you got, their stock, it costs you $1,300 for one contract, just at the money, $1,400 now, because Tesla's crazy. But we'll go back to like Bank of America. So what I'll be looking at is I'll be going, for example, I'll look at the trend. I'll say, yep, it was going up, and now it's coming back down. I'm pretty much looking to flip these within the next day or two. So if I buy Monday, I'm looking at, if I got 14 days, well, by then it'll be 11 days out to expiration, 10 days out to expiration. I'm looking to buy and sell within a day or two. So typically I go longer than that, but I usually like going 3-4 weeks out and kind of holding, and I've been doing just a lot of vertical spreads lately. But with the market how it is, I'm just going to be doing these quick, make a trade, hold it for a day or two, like no more than 2 on a 14-week, and they're all going to be singles, no verticals. That way, I'm just flipping them right away. Try to get a few $100. If a stock takes off, good, and I can make 100-150%. That'd be nice, within a day or two. So, like I said, I'd be looking at like Bank of America. It's been going down. I'd be buying puts on it. I'm a big fan of the MACD and the RSI, especially the MACD. It's all about the momentum on it, and right now it's going down. So I'd probably do something like buy a put on Bank of America at just something pretty far, like four strikes in. I'd be paying 195, 196-ish probably for a 31 put, but that's good. It'll go up or down, obviously, and hopefully make me some money. I don't want to, like I said, I don't want to hold any longer than a couple days, 2 days tops at on a single with 10 days to expiration. If I put this in on Monday, theta starts hitting you pretty hard, so the stock's got to start moving, and you got to get in and out. Another good one I kind of look at is silver. Silver usually goes kind of sideways, but now it's kind of been going up and down depending on the momentum of it. And gold's the same way, kind of follows silver, or silver kind of follows gold. AT&T is kind of sideways. I'd essentially want something ideally that was kind of trending down, and then it was kind of okay, and then dropped or stayed steady with the market recovery, because then if I'm buying a put, it's going to keep going down. And usually I'm a big fan of the month-day indicator, but on shorter plays like this, like you can look at, you know, the 10-day, kind of see what's happening, because you're looking at a shorter time period. So I like looking at the trends and looking what's going on. So you kind of look and say, yep, it's going down, going down, going down. Is it going to keep going down? That's my guess. There are some stuff, like I have a LI Financial. So it looks like, yep, be going down. Even had earnings come. Didn't really affect it too much, going down. And if you look at it, you go, all right, yeah, they're cheap options, right? So this is one thing to keep an eye out for. Cheap options, looks good. Exactly what you're saying, right? Don't get too much of them. You have to look at the volume and have to look at the open interest. If we're looking at buying a put, the 47 volume, it's okay. 39 volume, not the greatest. Decent amount of open interest, but I'm a lot bigger fan of looking at volume. If you get into, if you're like, yeah, you know, the 29, that looks good, I'll buy one of them. The volume on it's 4. It's going to be tough to get in it. And like I said, we want to flip these. I want to flip them within a day or two. If something happens, you can't get out of it, then your money's tied up. The stock's going either skyrocketing if you buy a put and you're like, oh, I got to get out of this, but you can't. So definitely keep an eye on the volume. Not just this market, but like if the market's going good. If you're looking for a day or two to trade, to get in and out, you have to be looking at the volume. I usually go at least 100, and that's like minimum if I'm going to do that. And the expiration's not even the greatest on it. So that's the other thing too. Like I said, 35 days, it's not going to be as volatile as in the pricing, and we're looking to get in and out and make, you know, a few $100. We're not going to be finding that with 126-day expirations. Even 35 days, it's not the greatest time frame. Even stuff like, what did I say before, Bank of America. So their volume, I mean, you're looking at 6,000 on that one, 400 on that one. If you wanted to buy a call or sell a call, for that matter, if you wanted to do that naked and not do a spread, I would not recommend it, because I'm chicken and I don't sell naked calls. But I mean, our volume on there, 100. These ones out of the money, 1,600, 1,700. So those ones are good. 700, 200, 400, 100 here. You know, that all looks good. So that's what I'm going to be looking for this weekend. Try to get together some trade ideas for Monday, Tuesday. I'm going to look at the charts. Like I said, the MACD, RSI, I'll see what's going on with them. And, but just a little guidance for you guys. That's what I'll be doing. So that's what I'm up for options this week. And into next week, we'll see what happens with the market. Hopefully it starts recovering, because my portfolio is not doing the greatest right now. It's all right, but yep. So if you like this video, if you found it helpful, like, comment below, subscribe to Tony's channel, and check out, if you don't know, check out Tony Ivanov on YouTube. He does penny stocks, day trading, and he's killing it there all the time. He's got so many technical videos, so many good trades. You can join the chat room we'll post a link below. I'm always in option chat, answering questions, putting out ideas. Tony has like live trading sessions he's always in, posting his stuff. It's just a really great resource for us, you know, normal people, retail traders. So So yeah, check that out below. Anything else? Post comments, like, subscribe, share. Thanks, guys.